Hey everyone, thank you so much for joining us for yet another interview of this business summit. Today we are talking to Roger from Barclay Insurance Group, and we're going to talk business insurance. We're going to talk about different reasons you need it, why you should have business insurance, what needs to be covered, and really get you an understanding of what protection for your company really looks like. So, Roger, welcome.
Thank you, Bill. How you doing today?
I'm doing really good. So let's get right into it. The first thing that I think we should kind of paint the picture of is when we're thinking insurance for businesses, how does that differ from the consumer side? So say someone really has no experience in the business world, you know, why would this insurance be different? And what are some of the items that someone should consider when they have a business and are thinking of insuring something?
Well, basically, the first thing is depends on what kind of business it is. That is key. Whether it's a contractor, whether it's a like a little mom and pop card store, pizza place, restaurant, larger restaurant. If you're buying a apartment complex, so that everyone has its own challenges, its own differences. Um, so it's what the coverage you're going to need is going to depend on what business you're going to buy. For an example, if you're buying a restaurant, you're going to want spoilage. So in case something happens, hey, there's a lightning strike and you lose your freezers. You don't want to. If you lose all that inventory, then you need to be paid for it. If you have a apartment complex, you're going to need coverage on the buildings, liability coverage for the sidewalks, for the streets, for everything that you own as part of that complex. Now, every person there should have their own renter's policy to cover their own personal belongings, their own personal liability. If you have a card shop, you're going to want liability to cover somebody in the store if something falls on them, if they slip and fall because you're mopping the floor, outside if you own the sidewalk, if you own depending on what you own. So there's so many things that you have to consider on a business policy.
Okay, so definitely a first step would be to really know your business and really start to think, where are my liabilities? Where am I vulnerable, and also what would I want to protect? Does that sound about right?
Well, yeah, I mean, liability is general coverage is a coverage name, but you have liabilities that you have to consider, like a trucking outfit. If somebody has a trucking outfit, they're going to pay. Your liabilities are more of like on the auto side, whether that truck's going to hit somebody, backing it back into somebody. Then you're going to have the liability of the cargo, whether you are, there you are responsible for it, but it's whether you own the cargo or whether you're just shipping it for someone else. So there's just so many liabilities. On a restaurant, you're going to have food poisoning. You're going to have maybe broken glass that somebody cuts himself. Maybe somebody serves a minor. There's just so many liabilities out there that you have to consider.
So it's definitely something that requires a lot of thought when creating the right policy for a company.
Well, that's up to the agent. So when you go to an independent agent, you tell him what your exposure is, what you're going to be doing, and then we'll ask the appropriate questions. We'll know based on what you're doing, and then we'll ask the questions to find out and uncover the needs that you have.
Mm-hmm. Okay. So coming off of that, we touched on a couple different businesses there. We touched on some of the different things they might be liable for, and kind of understanding that there's definitely more to it than just general liability. I think what I want to get into now is kind of set it up in two different things. So one part I want to talk about some different questions, and another part I want to kind of go into some different examples of businesses and what might be applicable there when it comes to insurance. So I think I want to kind of start with the other questions first, so because they kind of help us with that last part, which is going into some different businesses. So we talked about some liabilities that businesses might have, but the next question would be, what are some different policies a business might get or need? We have liability, but what are some other things we might protect, or like what are some different things that they might consider when it comes to the actual policy itself, or the type, or how you would organize that, if you will.
Again, it's going to depend on the business. If you have a restaurant or card shop or something along those lines, what they call a business owner's policy, or as we call it, a BOP, our acronym, will cover all that stuff. The only thing it won't cover is your workers' comp. So you'll have a separate workers' comp policy, but everything else, your liability, your umbrella, your business personal property, everything that you own in that business, whether it's the racks, the inventory, anything like that, it's all covered under the BOP. There's also an extra expense part of the policy, which if your business is closed down due to a covered peril, lightning, for example, you can't work, you should be paid for that time because you need to be paid. So after so many days, you can get a 1 day, 2 day, 3 day, 30 day, basically an elimination or deductible, and then you get paid for how much coverage you have per day. So, but if you have a trucking outfit, or if you have trucks, you got to have your auto liability. You have to have your, if you know, delivering oil or fuel or something, you got that liability. That policy is going to have to be a separate policy. You got the pollution policy. There's just so many. Unfortunately, it's not one of those one size fits all, paint it whatever color. It's going to be one of those things where every policy or every type of business is going to have an individual type of policies. Your contractor, you're going to need tool coverage, because you could have thousands and thousands of dollars in tools. So it's again, I'm not trying to be vague, but it's just going to depend on the business.
Absolutely. So let's break down some of the examples that I think a lot of people are going to need. So workman's comp is a very popular one that a lot of people need, especially if they're in some sort of working industry where people can get hurt. So let's talk a little bit about workman's comp, how it works. What are some factors that might change what that price might be, like how many employees or whatever might evaluate those things. Kind of give us some background on that side of things.
Workers' comp is actually, if you have employees, you have to have it. That's the law. So rating factors vary depending on what the job classification is. Somebody clerical is a lot different than maybe a roofer, or a carpenter, or a truck driver, or a warehouse worker. There are thousands and thousands of classifications on the workers' comp. And then the other factor is how much they're being paid. So their salary is going to determine how much that, and their classification is going to determine how much they pay for each individual employee. Now, you can cover up to $500,000 or up to $1 million of coverage per incident. Those classifications are all set by the state of New Jersey, and each one has a rating factor, again, set by the state of New Jersey, because every workers' comp accident gets reported to the state, and you get what they call a rating mod, and that's going to be, it's kind of like a multiplier to tell you how much you're going to pay for that particular employee. Now, clerical is one of the cheaper ones. So because there's chance of them getting hurt are kind of limited, and there's a very low percentage of people who do get hurt. A roofer, as far as contractors, is your highest. People are falling off roofs, they're going to get pretty hurt. So they're going to get hurt carrying shingles up the ladder. So there's that's one of those things that you have to have, and it varies per state. If you work in several different states, you need to have workers' comp in each one of those states for those employees.
That's good, really good to know. I didn't even know it was that in depth. So that's awesome. All right, so let's talk about another piece that I think is some people are familiar with is just and we touched on it a little bit, but let's kind of go through the same thing we just did with the workman's comp. But so general liability insurance, what might fall under that? How do we determine if we have enough coverage of it? And then also, are there certain instances where it's required or maybe not required?
New law that if you have a business, you have to have liability insurance. That's a new law, just went into effect just recently, signed by the governor. So any kind of business, you have to have liability. Yeah, basically, it's your negligence causing someone to be injured or killed, or one of your employees' negligence causing someone to be injured or killed. So you're responsible for your employees. So if you have a landscaper out there and he hurts somebody with the lawnmower, then you're responsible for that. That's why you should never hire somebody under the table, for one, because then it gets really bad, because then you have no coverage. Um, so you want to make sure that, and how much you need basically is what you're comfortable with. You're basically, if we usually write $1,300,000 per incident, up to 3 million aggregate, so up to $3 million per year that they'll pay. Now that varies from personal, because just to give you an idea, on your personal homeowners or something like that, it's per incident. So if you have $1 million and you say you have rental properties and an umbrella, you get $1 million per each rental property each time. There's no 5 million, $3 million limit. It just keeps going and going and going. So, whereas the commercial, it's an aggregate, and that's as much as you get for the entire year.
Okay. Cool. That definitely helps put things in perspective as well, and definitely knowing that that's a new law is good to know as well. All right. So let's see. What's another? All right. So let's say another, like an automobile insurance policy for commercial vehicles. How does that differ from personally owned vehicles? And is there, like, what are some of the differences we see?
And it's going to depend on the type of vehicle. So if you have what they call a private passenger type, a car, a van, or a pickup truck, they're private passenger types of vehicles. Um, you have a symbol number on the commercial side, which is depending on what you buy and what kind of vehicles you have. It depends on whether it's, number one is the best symbol. That means any auto. Doesn't matter if it's a dump truck. Doesn't matter if it's a tractor trailer. Doesn't matter if it's a Yugo. And that's what you're driving. That's the symbol you want. But the biggest difference is, one, the coverages. Usually they start at like $1 million on the commercial. You probably get 500,000, but the difference to go from 500,000 to $1 million is probably $30 a year. So it doesn't make any sense to take the 500,000. Whereas in the personal lines, you can get a single limit or you can get a split limit. But the biggest real difference is the personal injury protection that comes with all personal lines policies. Even the dollar a day policy, which I don't know, it's basically just medical, 250,000 medical, and that's really it. No liability, no nothing. But that's PIP. PIP is by statute, which means that if the judge rules, even if in a commercial policy, that you don't have PIP on your policy, and he rules that there is PIP, the company's going to pay PIP, which is personal injury protection, for that person driving the car. Now, you also have your workers' comp, but say it's a one-man band, one owner. He's a consultant. He just has liability, and he has the auto. He doesn't have workers' comp because the owner can exclude himself from workers' comp. He could get PIP, and then the company would have to pay the PIP medical coverage.
Mm-hmm.
So that's the biggest difference, is that PIP, and that's, a lot of people don't even understand it. That's an acronym for us. Again, it's personal injury protection, but I'm so used to saying PIP because that's what I've been saying 30 years.
Yeah. Okay. All right. So the next thing that I want to kind of go into is, and it's really just a question, and there might be more of a conversation afterwards, depending on how it comes. But basically, is there a difference? Like, are there different insurances that a new business would potentially want to get as opposed to an established business? Are there any differences there besides just maybe a bigger company needs a bigger policy?
No, not really. You need the same coverage if you're starting out say you have 3 locations, all right, and you bought a business that has 3 locations, 3 liquor stores. The coverage is still the same. What changes possibly is the rate based on your experience. Certain classifications, if you're a new venture, it could be a little bit more because you don't have the experience of running that business. Now, if you've worked in one or you've managed one, now you have some experience. But people buy things and they have no idea what they're doing. So you're going to pay a higher rate.
That's definitely really good to know, especially for someone who is looking to buy a business or looking to get into something they don't necessarily know a lot about yet. All right, so I want to kind of switch gears and get into that example by business. And I think this will be really good for some people watching, because there's a lot that we just went through, and how to kind of apply it to your industry sometimes is hard to do. So we'll just go through a couple, and I think that'll kind of also bring in um, some ones that they can kind of like infer across the board. So, for example, the first one I want to talk about is like, say someone's getting into a car rental business. When they're looking at that kind of industry, what are some insurances that they might think about or need, and some liabilities that they should maybe be aware of.
Well, car rental business, that's a really weird one. And the reason I say that is because when you have that kind of business, you can get the liability, which is probably going through the state plan, which is the commercial auto insurance plan,
Mm-hmm.
to buy separate physical damage coverage from another carrier, which is usually a surplus line carrier because it's a higher risk. So if you're opening that, you're going to have two different policies for every car, and then you have that liability of somebody goes out and kills somebody, and they say, well, the brakes failed. It's your fault. If it's their negligence, sued, but you can also be sued because you own the car. So that's just one of those businesses. That's funny that you picked that one. One that's very good. It's going to be very complicated for someone buying the business, because nobody's buying a car rental company. They're all your major national companies. There is no single individual or small group of people who are buying car rental property policies or businesses. It's just not happening.
Mm-hmm. Okay, that's cool to know from that standpoint, as well as some of the things. But to me, it can also carry into getting the idea of, like, if I did anything with cars, like or an industry that might involve vehicles or transportation or things like that. A lot of those insurances might carry over, which is what I was really going for with that whole, like, let's talk about an industry, and people can kind of extrapolate from there if they're somewhat affiliated. So let's talk then about, like, say a trucking company. What would we think would be involved there?
Well, the big thing is whether it's going to be a long haul or short haul trucking company. Long haul is very specialized, much more expensive, because you have the risk of people like to drive longer than they should. The federal government, when you get that CDL, the federal government only allows you to drive so many hours a day. If you're sitting at a stop waiting to unload, that doesn't count as driving. You can only be behind the wheel 10 hours a day. All right. The other thing is you have to think about is the cargo insurance. What's your cargo? That's basically how insurance started. Basically, a couple hundred years ago, cargo coming across the sea in ships. Lloyd's of London started the insurance for that. They were the big writer back then. So you imagine how much money they lost of all the ships that got sunk or just sunk for whatever reason, storms. They lost their cargo. The person buying the cargo, shipping it, wants to get paid. And the person buying it wants to get paid or get something in advance because they've already put the money out. So that cargo insurance that's a very expensive one. Again, that's one of those specialized type of insurance policies that only a couple carriers out there carry.
Okay, that's definitely good to know, because cargo's common across a lot of different things. Now, is that kind of the same idea, though, too, with inventory, or is that perceived differently?
So inventory is already in your building or your warehouse or wherever it happens to be, and whatever happens to be. Cargo is in shipment, in transit.
Okay, so that's how they distinguish. So then the cargo would be more at risk than something in your store, or do they see that as the same? Okay. All right. So let's talk about, let's say someone, like, here's one that I think is, it's not necessarily, I think, a building field, but like, I think more people are getting into it than usual. So like lending in general, like lending on properties, especially for real estate investors. There's a lot of private money groups popping up. There's a lot of personal people who are looking to lend their own money. What kind of insurances might someone look at when we're thinking of lending out their own money? Because I think private lending is more of where I'm going with that, because big financial firms and stuff, they already know what they're doing. But I mean, like, if someone's personally, there's as a business looking to lend out their own money, what would they might want to consider for that?
Again, everything comes back to the type of business it is. Surprisingly, I know everything I said. Every time you ask the question, I come back to that same line. Now, somebody's just a real estate investor buying a 1 to 4 family home, all right, to rent out. That's going to be on a personal policy. Even in LLC, that can be on a personal policy. So we'll write a fire policy for it, which will give it premises liability and cover the building and whatever kind of a contents that the owner may have, whether he's buying refrigerators, stove, washer, dryers, that kind of stuff. On the commercial side, you want to, depending on business, somebody's buying an apartment complex. You want to make sure, first and foremost, they have enough building coverage to cover in case a whole row of buildings burns down. So that if you're buying a condo association, that's different, because if it burns down, there's always a thing called loss assessments that you can get. But if you're buying an apartment building, apartment complex, there is no such thing. You're not assessing the tenants because they don't have any interest in it. They just live there. They're not a part owner like you are in a condo. So building coverage is first and foremost. Second is you want to make sure that you have the liability, of course, and enough in case you get sued. So you're going to want probably a $10 million umbrella minimum, along with the $1 to $3 million of coverage. If you're buying like just 3 different stores, again, you're going to want the building covered. What depends on whether you own it or you're just renting the space. You want to make sure you have that. If you own the building, you want to make sure you have the building coverage. You want to make sure you have the inventory, the liability. If you have a vehicle, the vehicle coverage, the umbrella, the workers' comp, because you're going to need employees. So you're going to want to make sure that what business you are lending the money to has the correct amount and correct coverage for each one of those possible losses or risks.
Okay. So then if you're lending money straight out to somebody, you want to make sure they have insurances to cover, because then you would be considered someone who'd be paid off of that policy. Am I understanding that correctly?
Right. You could be an additional insured. So you can't be a named insured, but you can be an additional insured, which means you get copies of the bills, copies of the policies, copies of the cancellations. If that gets to the point where they haven't paid the premium, then you could go to the person and say, hey, you haven't paid, let's go, pony up the money. But you can, as a lender, you can get all that, and you want to be on top of all that to make sure that if something happens, you're going to get paid. You get your money back.
Okay. That's really cool. That definitely clarifies a lot of things. From all we've been talking about today, obviously, when you have a business, having the right person to help you figure out the coverages you need is very important. But then also understanding your field and what it is that you're like, what you need to get done. Because you said it could go up if you don't have experience in it. So like, I think we definitely hit on a lot of intricacies that are very useful, especially when you're thinking about the insurances you need. And then also, making sure you have the right person is definitely that huge part. So I think that my last question would be just simply, is there anything that you don't think we touched on that you think people should know when it comes to businesses and insurance?
Well, I think the most important thing is getting an independent agent. I know I touched on it briefly, but you want an independent agent because not one size fits all. As far as I'm concerned, one size fits nobody. So you want to make sure that they have numerous markets, because you may have to put it with 2 or 3 different companies depending on what kind of business you have. Whereas if you go to a company, a broker or a captive agent, like say a State Farm agent, I'm not supposed to say that. You can blip that one out if you want, but they only have one company they write for. That's it. And your business may not fit into that mold because they can't. That's just not their thing.
Okay. Awesome. Well, I really appreciate your time today, Roger. I think we definitely got a lot out of this, and Definitely, if anybody has any questions, please, reach out to Roger. He can definitely help you out.
And my phone number is 856-829-1594. My extension is 1219.
Awesome. Thank you so much, Roger.
Thanks, Bill. You have a great day.